the control button to start the recording again. That's annoying. Oh, there we go. Thank you, Sam. I don't know why I can't see that button. That's annoying to the nth degree. I guess it's not for dummies like me, right? Anyway, I think we're going to where we need to be going, and we are recording, so that's a bonus. Welcome, and thank you for joining us for today's Trading Buddies. Thank you for being our Trading Buddies for this Thursday, the 10th of November. Of course, tomorrow being Remembrance Day for those Allied countries who served in World War II. So, happy Remembrance Day for those who are involved in that. I wonder if that's one of those days where the S&P 500 is supposed to rally. Don't quote me on that, but it's often the case prior to a bank holiday that the S&P 500 rallies. Please don't quote me that tomorrow is going to be one of those, because I've absolutely got no idea. Ash might know. There are a lot of those events, actually, that are worth... Am I actually sharing screen? Can you see my chart, guys? I guess so. I just can't see the chat right now. There's the chat. I've got one screen too many open. Okay. Excellent. Thank you, Gary. All right, good. I can relax. Let's get to the pound versus the US dollar, shall we? Interesting week, pound versus the US dollar, I've got to say. And if you've been trading it this week, well, you could have had, I suppose, you could have had 3 winners if you'd been smart. Certainly Mondays was a winner. Tuesday, TP1 only for me, and then out for break even. Yesterday, pardon me, I didn't take the trade. The entry was there and price was there at the time. Had you taken the trade, you would have got beautiful, lovely trade. But that was too close to the entry for me. Been a problem on my audio. No worries, all good for you. Okay, cheers, Sam. Thank you very much. And so, yeah, like, I'll have to declare that for the record as no trade for me, because that is exactly the case. Tuesday, break even. Monday, nice winner. Today, we've got price pretty close to the entry once again, very similar to yesterday. And I'll just monitor that for the next 30 seconds or so. And if it gets down to here, I'd be interested in taking it. If it doesn't, it may be too close to the entry for me. We shall see. I can put the parameters in anyway, can I not? 0.05 is what I'm going in at the moment. So what have we got? 1.1389. It's actually 1.13895, if my maths is correct. Stop loss is at 1.1364. What do you reckon we take it, guys? I think we can. 1.1364. And first level of profit is 1.1413. So it's a buy. Oh, it does belong there. Cut. 1.1364. Okay, get rid of the 30 and go to TP1 and put in that level that I cut, which is 1.1413, which is correct. And we won't take anything off the table, but we'll move our stops to entry. And I'll fix the target up in a tick. Well, I know the target, don't I? 64, 30, 20, 25. So 50 and 12 and a half, 62 and a half. Let's call it 62. 62 pips. Okay. Okay, no TP2, it's a buy. Righto. It is close to the entry, I've got to say, but if I close my eyes and open them again, I've got to see this, haven't I? It's a rejection of the weekly pivot, and I've got to see the target, or the first take profit target, underneath the daily pivot. I can't not see that, I suppose. G'day, Lewis. How you doing, buddy? So there we go. We're going long at 1.1389 and stop loss 1.1364. So 25 pips and change in that. Righto, updates for those of you who follow me or the Telegram channel. I'll update the trades that I'm in. I'm not sure if we posted any trades on Monday. Oh, yeah, we did. Weekly trade, which was pound Swissy on the weekly. Playing a game changer bar to the downside, and we're in profit, but a little bit of a pullback there today, as you can see. I wouldn't like to see this get above the monthly pivot. I wouldn't think. There might be trouble brewing if that's the case. Let me see. Oh, no, it's got a bit of space, but yeah, that looks to be danger area for pound versus the Swissy on the upside if it breaks that level. So I'll be monitoring that closely. The other one's correlated, and it's Swissy yen. Swissy yen, we are a little bit out of the money at the moment. We've been in the money for nearly 24 hours, not even 20 hours or something like that. Big sell-off bar in the last hour. Trading this on a daily, and it is playing a false break of the support trade line. But not only that, it's also a break and retest of the weekly pivot, break and retest of the monthly pivot. And like you can see, we have been triggered into that. Once again, I wouldn't like to see this close below the daily pivot. And if it does, I'll probably reduce my risk. Certainly the aggregated risk is at full tilt at the moment on both those positions. So need to see a bounce off the daily pivot on both, I would imagine, would be the go there. If that's not the case, we may need to reassess. As far as today is concerned, Swissy yen was today's trade. And again, I'll give them the reason for that, false break of all of those things. There was a bit of a, and it all apparently goes with the pound at the moment. There was a tendency today for me to think, I'd like to add to this position a little bit, but I'm still at risk on both positions, so I can't do that. And one of them was euro pound. The other one was pound Aussie. Yes, pound Aussie. Would like to have an entry below that bar there on pound Aussie, but I'm too exposed for that single currency at the moment. So the answer for that is no. But I totally see the trade. You know, if you're not involved in any of those, then maybe that's a consideration for you. There were 1, 2, 3 game changer bars on the radar today, and they are. Why am I in 3 positions there? Oh, the pound's triggered already. Okay. Right, a little bit to go before we can move our stops to entry. So a little bit of a push up here would be good. I'll go back to that and show you those game changer bars for the day. CAD yen was one on the daily chart. CAD yen, suggesting that we go short, and that looks to have triggered. Gee whiz, you've got to be keen to go short there, really, at the end of the day. There's a mess in here, a complete mess. Triangle, yep, got it. Inside it, yep, got it. Pivot sandwich, got all of that. Double top, got that. Where's the lower high? Is it there? If so, we didn't get a lower low. We got another lower high. It's too hard for me. I love the candle in terms of position. I'd like it to be a green body. That would be better. But it has closed below the daily and the weekly pivot, but not the monthly. So, you know, really tough to trade into that. And for that reason, and probably others. I'm not sure what they are. Well, the yen, I suppose. You've got to trust the yen to be strong, and that's really a tough call. It is a squeeze, Lewis, and just too hard until I see a clear lower high. I just can't trade that. I'd like to, because I think it's probably going to go, but it's just something I can't jump into. Three others actually. EuroCAD was one. EuroCAD suggesting that we go long, and probably not the worst again, except for the fact that you've got a strong resistance level dead ahead, which has now acted as resistance. And similar to the pound pairs that I'm in, we've had that retracement. Well, I hope we've had that retracement. Now we can look for a bounce. So if I was in this, I'd be kind of feeling not that great, because once, twice, 3, 4, 5 times, 6 times, 7 times, we've rejected that level in the last few days, or sorry, the last month or so. So yeah, very, very difficult to trade that long for similar reasons. Pound Kiwi, I didn't mention Pound Kiwi. One of my old favourites, Pound Kiwi, and again, certainly not the worst. The one thing here, and it would probably stop me taking the trade, given that we've got a red bar as well, but that's not the one thing. The one thing is, I've got a Pound Kiwi chart. I don't think I do. Yes, I do. I've actually taken the trade. I didn't realise I'd done that. Really? Okay. Let me have another look at that. Okay. The one thing that will stop me taking this trade, now, sorry, I had to gather my thoughts, was or is that the neckline of this head and shoulders, which is pretty clear, has been broken, but not yet retested. Now, that retest can happen in 6 months' time. It doesn't have to happen now. But it's the only thing that really I was a little bit concerned about. And I have added, again, to my risk on the pound. But I didn't think it was such a problem, given when I took the trade, this was already going bullish. So I figured if that was going to there, it was going to go to there without me being taken into the trade. So I have taken that position. It is high risk now because I've over leveraged myself, or overexposed myself on the pound short, in fact. But there are the levels if you want to follow it, and if you're not involved in those other trades involved. Well, there's only one involved in the pound, I suppose, pound specific, because I didn't take the euro pound. That could be something that you look at. I do like the fact that we've had the rally and the rejection, triple rejection of the weekly pivot, and that we've now got some bullish price action. Because if that's going to go to there, I'd like it to go to there now, and we could pick it up a little bit later. Lewis is into Aussie Kiwi short. Wow, that's been a thing, right? And you guys may well remember me saying months ago that when the Aussie and the Kiwi get above 110, the only thing you want to do is look for a sell. And I've been doing that for quite some time. Yet, I haven't found a way in. Can we find a way in, Lewis? Let's have a look at it. Aussie versus the Kiwi. Wow, again, what a mess. It looks more like a set of toothpicks than it does like a set of candles, frankly. I see exactly the entry potential, but I also see the support level dead below. Much rather see this come back to this level, don't you think? Much rather see that and sell it from there than from there. But I totally see it. It is a rejection of the weekly pivot. I am not going to trade it because I'd have to take profit here at the low, and the reward to risk on that would be just silly. So not one for me yet, Lewis, but should it get up to here, then I can totally get with you. Absolutely. Don't mind that at all. Sorry, I have to keep monitoring the waiting then, you guys, and that's annoying. It looks like everybody's in that needs to be in. So that's Aussie Kiwi. There was one other, and we've gone straight from pound Kiwi, which is one of my favorite things to trade, to one of my, in fact, the worst possible thing that I could trade, and it is dollar yen. Now, dollar yen suggesting that we go long here, and yeah, there's no way on God's green earth that I could absolutely trade that long. Not in 100 years, not even 200 years. And if it goes, it'll go without me, no question. I'd rather be trading this short than long, I've got to say. But the game changer bar is suggesting that we go long, and game changer bars, for those of you who aren't aware, are valid to the primary, not necessarily trend, but the primary chart pattern, if you like. The chart pattern here on a primary level is showing me nothing but bullishness, because we've been through, I don't even know what that is there. Let's go to the real chart. And here's where I gauge whether a game changer bar is tradable or not. It's whether the big boss, as I call it, is actually in play. And the big boss on this occasion couldn't be any clearer to me. It's not the skyrocket. It's the inverted head and shoulders, which is massive, absolutely massive. But it's really telling me that until that's violated, the only direction that you'd want to trade this is long. Oof, what a call. How can you trade that long from there? How can you get into the market? Well, you've got to wait for retracement, I guess. Have we had a deep enough retracement is the question on dollar versus yen. And, well, it's shallow, but it's valid. It's come back and challenged or retested, if you like, the breakout area. So I can see why people would want to trade that. Do I want to trade it off that bar? Not 100 years, not 200 years, as I said before, because, well, number one, has it really tested that level? It's a cloud of a price, right? So probably it has. Number two, I've got a spinning top, not a bullish engulfing bar, not a decisive bar. I suppose it's a little bit decisive, but it's still a spinning top. And I'm trading straight into the weekly pivot, straight into the monthly pivot. There's the daily. We're above the daily, so that would be a little bit in its favor, but I just can't trade that. It's not there for me, despite the fact that, and added to that fact that I hate the currency pair anyway. So they're the game changer bars. I'll go through the weekly ones for you a little bit later, but I want to bring Ash in because I'm sure Ash wants to tell me what's going to happen with the inflation figures coming out in the States, how we should trade that. How you doing, buddy?
Yeah, not too bad, mate. Yeah, quite interested really in developments really over the last few days. The CPI number is going to be interesting, but I wonder whether it's going to be a bit of a non-event. You know, it's the one that we've been waiting for all week. But so many other things have happened. I don't know if you're up to date on what's happened in the crypto space, but
yeah, there's a bit of a crash, I heard.
Oh, unbelievable. Unbelievable, you know, what's going on there. And just further evidence that it probably does need regulation to kind of step in before it's really, you know, any kind of safe space. I think what's quite interesting about the crypto space is that it's continuously reported on a lot of the major media channels now. So obviously volatility is high in the space, and it's still the Wild West. It's only sort of like, you know, 10 or so years old. So it's still got a lot of, hi Lewis, it's still got a lot of time to go before it can be really properly developed. But I just wonder really where the next kind of 12 months kind of takes us, because this guy, Sam Bankman-Fried, the reason that we're getting a crash right now is that the CEO of FTX, which is one of the major exchanges, Sam Bankman-Fried, filed for bankruptcy because the FTX, in fact, I know what happened, that they fell out with Binance, and Binance held a lot of their tokens. And basically Binance kind of like threw a lot of their tokens onto the market, and it drove the price of the FTX token down, losing their market cap. Hold on, Scott, can't listen.
Then you're going to tell me that they bought them out? Is
that
no. Is that the
well? This is the thing. Binance then came. FTX sort of like went to Binance, and so they're not close bedfellows at all. They really don't like each other. But Sam Bankman-Fried went back to Binance and asked for help, and they were going. Apparently, they were going to buy them up. But I think they were talking about a shortfall of 1 billion. That was the assumption by Binance that they might have to kind of plug the hole by about 1 billion. But I think it's turned into more like 8 billion, and they've pulled out the deal, which is effectively crashed FTX to the point of extinction. And unless they kind of get somebody coming in to rescue them, it's kind of all done. But Sam Bankman-Fried is a really important player. I mean, we're talking about a guy that rubs shoulders with the likes of Tom Brady and Giselle Bündchen and on Time Magazine, and he was kind of the poster boy in some respects for the crypto market. But this is the second major player to go down in a matter of months, because we had Celsius and Alex Mazinski going. He's kind of like, I don't know where he's gone, but his company's collapsed. FTX has now collapsed. And if we sort of were to put this in context, it would be like Apple going down. It is a huge player. They are a huge player in the crypto space. And it just kind of, as I say, it adds further questions to the not the validity of cryptocurrencies, because cryptocurrencies themselves and blockchain technology is incredibly brilliant. It's a brilliant space. But I wonder whether the problem is that you've got maybe inexperienced people running huge organizations, and they literally kind of like went from zero to hero within a very short period of time, and end up flying too close to the sun. I mean, I've got almost no doubt that Sam Bankman-Fried, if he's not going to be, put in prison for something that he did wrong, and I don't know if he has, but if that's the case and he's not put in prison, I've almost got no doubt that he'll be back in a decade's time or whatever, and being very, very successful. It's almost like his first foray into a huge company has ended up failing because he probably just didn't have the experience to kind of keep it all in check.
Yeah, playing with the big boys.
He's playing with the big boys, exactly, and through no fault except of a lack of experience, has this thing ended up collapsing because it almost didn't grow in a kind of not a slow way, but similar to a trend. You want to see a trend kind of develop rather than just explode, because when they do explode, they tend to come down just as hard, as we'll probably see with the dollar eventually, as we saw with Bitcoin. So his company is in all sorts of problems, and considering this is really an exchange, they shouldn't be, because what exchanges are meant to do is exchange one token for another. So if Bitcoin's price goes down, then they should just be making money on the spread. So it suggests they're doing some kind of insider trading, or there's something going on. Why are they have they lost so much money? And it does suggest that they've got some sort of exposure there. He's a big backer of Solana, and Solana is I think it was down almost 50% yesterday in the one day, and it was already down prior to that, another, following the rest of the crypto market. So there's another potential blockchain completely gone and out the window, leaving the likes of Cardano really probably to mop up quite a lot of the mess and potentially Ethereum. But it's just fascinating what's going on there, and because of that, it's kind of left the CPI number as a bit of a non-event, in my opinion, and it may well not be. It might end up being something. If we look through the charts, we'll see the dollar at a really significant level. But in fact, let's do that. Let's look through the charts. So there's a couple of trades that I've got on right now, which
sure. But why are you doing that? Why are you getting prepared? I've seen this so many times before, where and I don't believe in Bitcoin, I never have, but I do believe in the technology as you've described, and I've said this all along. To me, it won't be Bitcoin that takes the current exchange of goods and services over. It could well be blockchain got that. But to me, this dump that we're seeing is playing right into the hands of the big boys.
Yeah, absolutely right, mate.
And as always, there'll be survivors come out of this who can afford for the share price, the Bitcoin price, the whatever price it is, to go as low as it possibly can, because they're very, very deep pockets. And as soon as it goes to the point where everybody's out of the market, all the other players are out of the market, that's when they jump in and buy everything up that they possibly can, and the price just goes through. This is not. I agree with you. This is economics 101, if you like.
Yes, it is. And you know what's probably going to happen is, as you quite rightly say, and it's probably already happened to a pretty far degree.
Sorry,
anyway.
Capitalism 101, I should have said.
Yeah. Probably what's happening right now is that a lot of those leveraged positions are getting washed out. So they get rid of all the leverage positions, which really cuts down the volatility in many ways. And then, as you say, the guys that can come in and actually buy at spot price will come in and pick it up at $10,000 a token or wherever it ends up settling. Then they come in and what I suspect is that there probably will still be some jostling around the 10,000, 15,000 kind of area, or maybe 20,000 area, while those guys do start to accumulate. And during that period is when we probably will see the SEC and the like kind of make sure that they've tightened everything up, because this is the problem with the crypto industry, is that you've got the likes of Sam Bankman-Fried really with a lack of transparency, and that's why we're seeing all these issues. So when the transparency kind of is really there for all to see in a lot of the exchanges, then it becomes a much safer environment, because a lot of people are getting incredibly burned by this whole thing. But I still think there's a space. There's money to be made there. But you're absolutely right. There's probably lower for it to go first. Get rid of some leverage positions, and then we'll probably sort of like start to see those that can continue to hold the token in not too bad a shape. Whether it goes back to where it was is the big thing. The sort of like even the talk of a million is well out the window right now for Bitcoin. But will it go back to 100,000? I'm not so sure, because obviously the environment would have changed. And if it does go to 100,000, could it take 10 years rather than one next time round? Because, as I say, the environment has changed, and there are sort of different players now involved in it. The fact
it's
that
the same with the equity market. It may take years to recover.
Yes, it could. It could. Now, if we look at the equity market, mate, I've hedged out a position on a short on the FTSE, because actually I quite like the FTSE just to kind of pump its way up to this particular area here. And I wonder whether there might be, and if you look at sort of many of these equities right now, the DAX is it's a fascinating chart when you look at the DAX, because we've had this downward channel that we've now broken out of, and this is relatively conservative. I think you could probably put the channel a little bit lower and still be relatively comfortable. But if we were to sort of look at what that does suggest about where the DAX is potentially going, that suggests European equities could get right back to these highs here, and we're talking maybe another 5 to 10% sort of like bump to the upside before it does start going down. I don't feel the same about the likes of the Nasdaq, because just as we've seen with the Nasdaq, as we've seen with the DAX kind of starting to find some support, we haven't with the Nasdaq. The Nasdaq still lives in this lower area. And what tends to happen with equities is that people don't leave the market; they just rotate their positions somewhere else. So while we've got the likes of the Nasdaq as obviously the growth sector, if you like, is a growth area, the lack of potential growth because of these interest rate hikes will suggest that the Nasdaq is not the place to be. And as I say, what people are more likely to do is go to the value areas, the likes of the DAX, the likes of the FTSE, the places where there are commodities and there are energy stocks. The commodity space actually this morning isn't doing quite as well And nor are the energy stocks. Shell, by the way, that I took a short on, has taken a huge dive to the downside, and I wonder whether we because we've got this black hole to fill with the debt that we've got to service. There's a I think a higher likelihood that Jeremy Hunt comes out with a budget, that the Chancellor of the Exchequer comes out with a budget that does punish some of these energy companies and does charge some sort of windfall tax, because they need to kind of get taxes going. So I think Shell and BP are probably possibly run their course for this particular run. Does that mean oil's coming down? I'm not so sure. I mean, if that was to happen, then it would be even worse. I mean, we got further kind of COVID problems in China, and it's pushed oil back down again after what looked like a breakout of this level here. It didn't hold. It hasn't held with any kind of confidence, and it's pushed oil all the way back down again. It might be there, and it's more probably there. Didn't hold the weekly pivot. That was the obvious area. Comes back under it. Yep. Does it come here and go lower, or does it manage to hold this particular level? I mean, it's just underneath it right now. So oil, very, very difficult to kind of suggest, what to do there. But if that was to come down further, Shell is going to, and BP are going to fall probably quite significantly. And again, from parabolic moves to the upside because of what's happened with the oil situation. So the CPI number, I suppose, just back to that point, the CPI number, as fascinating as it could be, it may not be the kind of main story when we sort of iron everything out by the end of the day. It may really not matter. CPI would have to
I think
go...
if it ticks, say 10.1, it'll matter.
That will matter. If it ticks 10.1, but do you know what the interesting thing is? I think the downside for the likes of the NASDAQ, potentially oil, gold probably, and silver, and all these sort of things is a much more interesting space than the upside, because even if it goes to less than expected, let's say it goes to 7.9 CPI, that's still very high. That's still restrictive when you think of monetary policy that it's going to have to be implemented. So what happened last week was everybody got excited off the back of potentially two releases. The first one was unemployment claims being 3.7% rather than 3.6%, which was crazy. So oil bounced up, silver bounced up, or everything went. And also the fact that they were expecting China to open back up again in March, which sent copper higher and silver higher and everything else. Well, that over the weekend was quashed. We've got further kind of problems with COVID over in China. So that taking the shine off that. You look at something like the silver chart, which I really like, but you look at this silver chart. I've got a buy ordering down here, but if you look at the silver chart here, really, are we just at a potential level of resistance here, and we stay back in this range? I'm not sure whether we've really done anything on silver, but just headed right to the top of the range. So, so silver,
that's the range I had. Yep.
Right. I mean, it's
So yes, I'd be looking for short right now.
Still questions, aren't there? Still questions on a lot of these things, even with huge kind of huge bounces to the upside. Same with gold, and I think
gold's a little bit different because it came off. It made a new high and closed on its low, which to me is a game changer bar, right? On the daily, whereas silver did not. Right. So but this still looks like that in its range as well. It looks like it's a resistance, yeah. And I think your point on gold over the longer term, picture of it, potentially this is the error. You might have it slightly higher, but it did look like we were through that. And this is a weekly chart, so by Friday we'll know whether this bar does suggest that it's a selling bar or not. And if by Friday this looks like a selling bar, the likelihood is that the gold is coming down again. So I think the fluctuations this week have been really interesting. But you're absolutely right. I think there's a high probability that inflation number comes in, as you say, hotter than expected, and
then all of a sudden, all the euphoria that we sort of see at these lower levels in the likes of gold and silver and the NASDAQ, all of a sudden just dissipate like that. And you know, the crypto space could be in all sorts of trouble if that's the case, because it's already had its own macro driver, well, micro driver, if you like, but it's in fact, the whole space has been hit. If that happens with CPI data, that puts further pressure on the crypto space. So I think there could be
everything. I think if it went over the 10, wow, there'd be so many people converting to a religion, I would have thought, because that's the only thing left.
It's not going to look good. I mean, if we consider the dollar and you know, and what's happened with the dollar, again, all the dollar did was come down to the lows of its range.
Mm-hmm.
That's all it's done. I mean, it hasn't done anything, you know. It just
my language now, see.
What's that, sorry?
I say you're talking my language now, see.
Well, this is the interesting thing, is that it's at the lower end of its range, but the range is incredibly wide, you know, and it makes it very difficult, you know, because this sort of is suggesting high volatility here, because people want to sell the dollar, but they've got to have they've got to have a good reason to do so. Does it burst through this area? Well, I would have thought north of 10% it certainly will. I'm not sure whether it'll do it today, but you know, it looks like it's going to be at least heading back to the top of the range. So that number is significant. It really is a significant number, and it actually states to me, you know, stay out the market until you know what that number is, because you could get run over. I have taken some unrelated currency trades in the Euro Kiwi, which I've just put stops at break even on that one. I'm just going to aim for the monthly pivot, but it might well be that this is the freeze point. But we'll see. We'll wait on that one, see if it makes any money. And the Aussie
that's a great chart, actually. Look, sorry, mate, if you want to go back to it, that's a great chart. I've been sweating on that one to get short, and I think where your target is, if that's your target, that red line, that's an awesome place to sell that, I reckon. That I wouldn't want to go too much higher than that, even though the reason I've taken this on is not because of the chart necessarily. Well, to a degree it wasn't. It was because I saw this coming into play. So, you know, I like that. My line was actually a little bit higher. It was there. So I did take it on a little bit early, and it did push down, but it's pushed up again now. So, but the reason I've taken this on is because I see the euro potentially closing the gap. And this is what we talked about, wasn't it? This is our case study. I see the euro closing the gap on the Kiwi on interest rates, and also on the Aussie. You know, euro currently at 2% and the Aussie currently at 2.85. And I think just the rhetoric from Australia sounds to me like they may be more dovish than most. So I actually prefer the Aussie, the Euro Aussie, for some upside than the Kiwi. I think the Kiwi's a little bit questionable. Plus the fact we got an interest rate from the Kiwi decision later this month, so that probably will cage that trade and maybe make it invalid in the end. So I do need a bit of a push from the euro here, but I quite like the euro, and I think for you know, to close the gap, potentially overtake the Aussie. I think that this one could be an interesting one as well. But aside from that, I'm probably going to be staying out. As I say, I've got a long on the FTSE that I've taken this morning, more as a hedge, I guess, because if I was really confident about the FTSE, then I'd actually sort of stack my positions into the long. And the only reason I'm not doing that is because, again, it's kind of really just here. Really, it's just it feels like it's kind of stuck in a bit of a range, and I'd like to see if this bursts to the upside and get me a higher low, then I probably would take on the long, you know, the genuine long, and actually sort of stack my position in a different direction. But I'm also I'd be quite keen on taking a long FTSE, short NASDAQ. I'd be okay with that. The issue with that, of course, is that the CPI data is going to be probably the significant driver. And if it's low, the NASDAQ's probably going to outpace the FTSE. And if it's high, it'd be the reverse of that. So not an easy trade to grab in many respects. So I'm leaving that where it is.
So that's pretty much it, mate. There are sort of some stocks that I've obviously got as well, but they are not relevant because we haven't got them on MT4, and not necessarily relevant for people either. But
You've been a busy boy.
I've been busy, mate. And do you know what? One of the reasons I've been so busy is that because the internal aspect of what's going on with some of these things has kind of thrown me into some judgments. Silver I see as potentially 3 to 6 months down the line being really high. And I don't see the same from you at UK housing, because I think that the interest rate is, and we've already started to see the numbers, weaken when it comes down to housing. So I have taken a silver stock, and I've taken a housing stock and hedge trade that.
Have you bought your silver bars?
No, I haven't got any silver bars. I don't know whether I don't know. Actually, I've got a silver coin, but that's it. I've got a couple. That's it. No silver bars.
Yeah.
You think that's sensible? Do you?
Well, how long have I been saying it? I'm not sure how long I've been saying it. Months.
Get your silver bars in.
Yeah. I've missed the price now. I think.
I don't know if you have.
I'd like to see it come back a bit.
Yeah, I don't know if you have.
This round, I think I've missed the price. I need it to be under 1,000.
Wouldn't it be the case? I mean, if you look at this chart, it does suggest that minimum, it's kind of like going to come back and test this line. So somewhere around about the maybe a I don't know, $1 or $2 to the downside before we could say we've missed it. I'm not sure, mate. I don't know whether this is gone yet, and it's going to be CPI, isn't it? If CPI comes in hot, silver's coming back again, and it may not come right as it might not come so deeply that I'm going to get this particular price, and it's that's just it's very speculative there. But if it comes back to the weekly pivot, I would still probably take it on there. It's be about sort of 40 cents above where I'd like it, but I'd still probably take it on around about the 20 mark. I'd be okay with that.
Oh yeah, look, as I said to you on Monday, I'm absolutely gutted that I missed that higher low back a week, yeah, that one.
Yeah,
gutted. That was the one.
yeah
that was the one. But I wasn't not so much interested in trading it as just holding it in silver bars. So I think that's the way to go.
Yeah, no, I think that's fair. Lewis is just seeing the Bitcoin crash and the spillover effect of Tesla. I don't think so, mate. Do you know what I think is happening with Tesla? I think that Elon Musk is probably not doing himself too many favors. As it with
what did I tell you a month ago?
What's that, Tesla?
Yeah. Just sell. Yeah,
but I think Tesla's price is now being affected by his ownership of Twitter. I don't think he's made a particularly good start in that role, and inevitably it's going to, isn't it? If he's sort of taken his eye off the ball with his company because he's gone over to Twitter, then that's going to affect things.
But there's absolutely nothing going for him at the moment. There's absolutely nothing going for Tesla at the moment. They had a recall of something like 1 million vehicles, like I said about a month ago. That can only do one thing to the stock price. That's not going to help.
Yeah.
And if you have a look at the Tesla chart, I haven't got one available on this computer, I don't think. But if you have a look at the Tesla chart, what was it? Nearly $600 or something?
Yes, it was. Yeah.
And what is it now? Less than 200? About 175 maybe?
Yeah, and this is where the sort of like the question about is there a buying opportunity with this stuff?
You want to go a fair bit lower first, I reckon. Have you got a Tesla chart?
I've got a Tesla chart, yeah. Let me bring it up. Hold on.
Actually, I can't remember how long ago that was. It was over a month ago, I told you, just dump Tesla. Sell it.
Here we go. Here's a chart of Tesla. 177 now, mate.
Yeah. Yep.
Yeah, that's brutal, isn't it? I mean, this is let's have a look on over the monthlies. So this, I
Four.
think this was the
Four
stock
something,
split here. So it is approaching support. It's approaching support at once.
It
Yeah.
needs it.
Yeah, desperate, isn't it? Yeah. Well, I mean, it was the kind of, again, he was the poster boy, wasn't he, for quite some time, and now we're starting to see Tesla weaken significantly here.
Yeah, I mean, if you're not in now, you've got to wait for a big retracement. That's the thing. So it's too hard. But yeah, look at all those game changer bars off the top. Game changer bar, game changer bar, game changer bar.
I mean, just well, and also we've also got with Tesla. It's almost like Tesla's decided to kind of put in the two things that the two of us look at the most. It's giving you game changer bars. It's giving me this head and shoulders. I don't know whether it's I mean, it's maybe shallow enough. I don't know, but is that the neckline? Probably looks like it's through. It's got to end the month down here, of course, for it to come back and suggest that 240 is another selling opportunity. But I just don't know why the market over the next year, I don't know why it would all of a sudden kind of pick up and rally. I think that we've probably got a year of maybe not more downside, maybe not more significant downside, because we've seen huge moves in the stock market recently. But I wonder whether we might just get a little bit of working out and a little bit of sideways price action, even on the likes of Bitcoin, over the course of the next 12 months, to 2023 being a transition year, and then possibly 24, 25 being when we start having a bit more confidence again. I've just lost.
Sorry, mate. No, you haven't lost me. It's all good. I've got an assistant here just about to assist me.
That's why your camera's off. I get it.
It's all good.
So we have got that's Tesla. And I'm just going to come back to the chart again, and we will look at well, look at Shell. Shell was another one that I've got some shorts on here. So we get Shell. This is the Shell chart here, right on top of a potential resistance level here. Now these are monthly candles, but let's change them to dailies. It could also be that we see Shell start to weaken off the top. Now I'm looking at Shell after the budget. What happens after the budget? We've had sort of earnings from Shell, and we've had release of investor earnings, and they've been very good. And a lot of people have been after this company for some tax and windfall tax, and the same with BP. So I'm looking at this as a potential shorting opportunity. Sorry, I'm looking at this as a with some further downside. I got a short up here somewhere. Wasn't as high. I wanted it at 74.50, and it wasn't quite as high as that. But I think when it broke down, this one at 74.10. So yeah, it might come back a little bit, but Shell would need to break down this level on a technical basis for it to really start to fall. But there's movement going on there. There's some really interesting moves going on with some of these stocks.
What will that depend on, mate?
That'll depend on the budget. That'll depend on what in my opinion. I mean, we've got firstly the budget, but also what's coming off the COP27 situation as well. Will there be a global kind of push to hamper some of these oil companies or not? I don't know.
Yeah, that was kind of that's where I was leading. Do you think it's possible that whatever's said there by, I hesitate to say it, but secondary lower level, if you like, influences?
Yeah.
If you get my drift.
I do, mate. Do you know what? I think those secondary lower level influences are, countries that have been really, they've been significantly harmed by global warming. And what's really happening right now with COP27 is that the major nations, well, some of the major nations, we've still got a little bit of a question about the States and China, but the major nations are accepting that they've got to pay reparations to the smaller nations that they've affected, the smaller continents that they've affected. So Africa and parts of Asia could be getting some reparations off the back of the fact that the likes of the UK, for example, have really benefited from the Industrial Revolution. And how are they going to find that money? So I wonder whether that's when they go to the companies and say, well, you guys really are the ones that have gained out of fossil fuels as well. So we're all going to be paying it back. And we're going to take from you guys with the biggest chunk. I think there's sensible things.
That seems to be a global thing, right? It seems like, governments or main players around the world have now got on board with that. So I'm hearing it here in Australia, very much so. And it does make sense.
Yeah, which is interesting. And but you see, the thing is, the likes of the United States obviously make a lot of money out of the oil industry, and
and that's the problem.
And we've just had, Lewis just mentioned the midterms. CPI could be overshadowed by the midterm, but that's done. The midterms are finished now, so we kind of it's going to be CPI is the next print, but the midterms basically have put Congress back in gridlock to a degree. The Democrats are going to find it difficult now to get anything passed through. But
there's no result there, is there? Is there a result there?
Yeah, I think they're pretty much 50-50. It wasn't quite as much of a red wave as was predicted. But they're last little dribs and drabs are potentially possibly coming in, but it's pretty much done. And it does sort of suggest that there's going to be a little bit of gridlock in the States with decision making and policy kind of going through. But the other sort of significant thing is that Donald Trump is likely to be running for president again, and if he does run, he's probably going to be up against I can't remember the guy's name now, but there's the governor of Florida. He's talking about running, and he's potentially been touted as Donald Trump 2.0. So neither of those two are particularly climate friendly, and they do sort of speak to the oil creating states in America. So DeSantis, thank you, Lewis. Yeah, DeSantis. So DeSantis, I don't know. I don't think he's going to be particularly green. I don't know. And the truth is, we need China and we need the United States to accept the problems there and accept that they're going to need to help us out. They're going to need to help the globe out and the planet out if this is going to change, because we're already very, very late to trying to not reverse. I think that's probably too late, but at least slow down the effects of climate change. So,
but how difficult is it do you watch Yellowstone?
No.
Then forget that. But how difficult is it to say to a guy who's got let's say 50,000 head of cattle that you've got to go vegetarian, the world's got to go vegetarian? How hard is that to sell, And that's the issue, and always has been the issue. Are we any closer to giving those dudes a solution to their fiscal issue, which is I'll go broke, right? I
totally agree, mate. And it's really sad.
That's the hard bit.
It is hard, and this is the problem. When you focus on the individual, then it does sort of like make the whole thing a lot more emotive. I mean, if you sort of like tell a story about 100,000 people dying in some sort of disaster, it doesn't seem to hit as hard as if you say that 15 school children have been killed.
Yeah.
And that's the thing. When we sort of focus on the individual, it's going to be difficult to sort of, because there will be these cases when everybody sort of talks about global warming, we're talking about the big picture. We're talking about the fact that, forget the farmer, we're all done. There won't be any farmers, if this thing continues. But of course you don't forget the farmer, because when you do sort of, find out about how hard it will be for some individuals, then it does kind of change the way that we perceive things. And there is an answer, of course, there's always an answer. And the answer probably is that the government needs to go and invest in places like Africa and Pakistan and everything else, bring back some cash, and then with those subsidies somehow help those people out that are going to get mostly affected by the change in policy. But they won't do that, of course. There will always be kind of collateral damage. And the government don't really sort of like mop up the people that are going to get most affected. They just get affected, and they've got to figure it out for themselves. But I don't know whether in the States that is kind of what the case is, because it isn't just those individuals. We're talking about massive oil companies that back the likes of Donald Trump and DeSantis. That those guys pay for their election. So it's not about the hard luck story. It's about cash. And it's about the fact that those guys will probably put Donald Trump or DeSantis into the White House with their money, and therefore will be able to influence what happens with the election and the policy. And that's the sad truth, is that if it was just kind of, okay, this guy's going to be in a lot of trouble, or there's going to be these people over here that are going to be in a lot of trouble if we change the way that we do things. How can we help them? If it was that, they'd find an answer. But there's the kind of the wranglings and the strings that need to be pulled to get yourself into a position of power are so vast and complicated that the average common man and woman just get left behind.
And the average common man and woman have got not the issues that those dudes have got, where they've got excesses of wealth. The average Joe Blow hasn't got even enough to get him till next week, right, at the moment, because the prices of this are going up, blah, 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 blah. So the average Joe Blow is in awful trouble as of now. So how can you say to that guy or that woman or that family that you're actually going to have to take a pay cut in order to fix this, because inflation has got out of control? We've got an issue with supply. We've got an issue with people wanting to rule the world, Putin, blah, 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 all the rest of it. The only way to bring back or to reduce inflation or to get some sense of equality is the word I'm looking for, is for you to take a pay cut, and everybody, the whole planet, to take a pay cut just to get rid of some sort of debt that's hanging over us, right? The other way to do that is to reset the whole thing, which is where we tend to be going, right? And what happens with debt down the track? The whole world, as I see it, thank God I'm not one of them, is up to their eyeballs in debt because they've got 4 properties or 10 properties or a boat and a caravan, and certainly that's the case in Australia because we're a very, very lucky country. But we can't afford it.
Yeah.
Because we're living off future money that may or may not exist, right?
Yeah.
In other words, and the whole planet is living in credit, has been for so long. And to answer the question or the problem as to how do we pay for this, simple. We just print more money. Yeah. And that's what's been going on forever. And well, not forever, but certainly in the last 30, 40 years, that's exactly how the world has been working. And now I'm no economist. And in fact, I was terrible at economics in school. But it's just common sense that can't continue to be the case. And something has to give. And guess what will give? It'll be the people who are at the lower end of the spectrum who will pay the price, and always do, always will be. The only way to stop that happening is to say to the world that, guess what? It's now a level playing field. And your $1 million in the bank doesn't exist anymore. It's gone.
Yeah.
You don't have any debt, but you haven't got any assets either. And that's not going to happen.
No, well, no, but well, I mean, this is the thing, isn't it? If it was, if we were talking about $1 million being wiped away and you got no debt and nothing else, that'd be fine. But if we're talking about having 15 quid in the bank and you haven't got that, you know, if you need that, if you're at the lower end and they do the same thing, you're basically you're resetting everybody's opportunity, which is. You know, I guess that the survival of the fittest from that particular point, and that's going to hit people hard. But the way they did, I mean, you're absolutely right, mate. The printing of the money, and they've accepted that. You know, the Bank of England certainly have accepted the fact that printing the money they did during the COVID-19 crisis has caused where we are now. But the way that they're going to potentially get rid of it, and this is one area that the Tory government right now over here. May well be pulling a bit of a genius string if they can stay in power for another term. I don't know if they can, but they might be sort of like pulling a bit of a genius kind of idea by hiking all these taxes as long as they can keep borrowing at zero, pretty much at zero, because hiking taxes with high inflation means that you're inflating your debt away. If inflation comes back down again, then they won't be getting quite as much money. You know, this is the time to do it. Get everybody now. When inflation's at 10%, this is great for them, really, because people will, you know, they'll pay, and even if, you know, they're talking about freezing the amount that you can give to your sons and daughters. So so inheritance tax kind of being frozen. Well, of course that is inflationary sort of as well, because you've got the fact that that money's not worth quite as much. So it does need to kind of that threshold should be up. You know, you should be able to give them more because the money's not worth quite as much. So that's also making the money sort of in many respects. And they're coming down.
Buy silver bars with it, right?
Yeah, well, they're coming down hard, but it's actually a sensible way to do it, isn't it? You know, this is the way. This is when they talk about inflating debt away. This is what they mean, and
yes.
You know, and the way that the common person can do it is by during a point where there's high liquidity and money's really, really cheap. You go and buy loads and loads of stuff which will go up with inflation, like gold as an example, I suppose, which will go up with inflation. So when everything starts going up, because you know, anything that is linked to inflation that starts going up, you can sell some of that gold and you're left with the rest of it, which means that you've inflated the debt away, you know, but because you've borrowed so cheaply. Which is really what's happened. And I guess that's what's happened to the likes of Sam Bankman-Fried and the like. But the problem with that particular strategy is if you borrow at the wrong time, which they probably have, Alex Mazinski and all those guys, they probably borrowed at exactly the wrong time on the turn, which eventually it does, then you're in big trouble. So I you know, and market kind of business cycles have become the last business cycle was a long one. But the bull market, just, you know, what we kind of saw, those bear markets were so shallow in their existence. That's what people got used to. So I think they probably continue to borrow when things were looking a little bit tenuous, because it's looked that way before and it's all been fine. Not recognizing the fact that this time it is actually different because the market drivers are different. The reason it's coming down now isn't because Donald Trump has tweeted about China. And it's not because the UK have left the European Union, and it's not because we've got COVID-19, which was fixed by scientists effectively. This is because of a systemic monetary problem created by, as you rightly say, the central banks, and it's going to take a long time to flush out.
But guess what the central banks are doing right now? They're buying gold.
Yeah, but you know what, mate? Interestingly, not Australia.
Is that right? I didn't.
Well, I looked at their last balance sheet, and there was no. Well, okay, so maybe they've got enough. Maybe they've decided they've got enough. But on their last balance sheet, the thing that was the highest kind of purchase was foreign exchange, which was not particularly bullish for the Aussie dollar. Another reason that I'm short on the Aussie dollar. So their highest purchase, and if you look through the years, it was a pretty sizable amount of foreign exchange they bought as well. So they're selling their Aussies and they're buying foreign exchange. Maybe it was in response to the United States dollar going up. I don't know. But then you go along a few columns and check out how much gold they bought last time out. Not a lot at all. So yes,
And
you're
I had
absolutely
faith
right.
in these people. I've just lost faith in them.
Well, I haven't done an aggregate. But they might have bought enough in
If
the
they're
previous
buying
months.
US dollars at the moment, they're idiots. Well, sorry, I
Well,
shouldn't say that.
it might not be US dollars. You know, it's listed as foreign exchange, so it might be sort of, you know, the euro. It could be a whole bunch of things. But the point is, they're selling the Aussie.
Yeah.
You know, they're selling the Aussie while hiking interest rates. It's just, I don't know, man. I don't know. You know, we're not clever enough to understand half of this stuff, mate.
No,
but
clearly not.
When I look at it, I'm like, hold on, isn't that counterproductive? It just doesn't make any sense to me.
It kind of sounds that to me. Yeah.
Yeah.
Who am I to wonder? And I think that's the whole point, really. At the end of the day, we can't really guess what these guys are going to do. We just got to follow what they do and find a position to take based on what they do, rather than, oh, they should do this, because you're just going to get run over if you continue.
Yeah, you got to trust the chart, haven't you? Ultimately.
Yeah. At the end of the day,
trust the chart and we'll be okay.
Euro dollar, what's happening?
Oh well, it should. Well, yeah. What would you trade that before the FMC? Difficult, isn't it?
Look, on the short term, why not? If I had an edge, but the edge is gone because the daily pivot's been broken and rebroken. So the edge is gone, and looks like the dollar is strengthening going into this announcement.
Yeah.
Certainly appears that's the case.
Well, there's the euro dollar, mate. You know, again, well, maybe not quite there. Let's do a channel. Let's see where this might not be quite at the highs of the channel yet. So it's still got a potentially a little bit higher to go with the euro dollar. But big moves over the last few days would suggest some yeah, it would suggest coming down. I mean, this is the problem, isn't it? You see that, you see that, you see that. Like literally no red bars in this whole area here, and these are 4-hour bars. So so the likelihood this comes back, maybe even to kind of like test this level. You know, let's have a look at a little fib as well and see if that adds any clarity. 61% retracement on the monthly pivot. Decent chance, mate, that's coming back there. The problem with all this stuff is that when you look at the bigger picture, they're all in a range. And even though this looks really vicious to come back down there, you're like, well, it's just coming back into its range. And it's, you know, the range is so broad, as I say, you know, none of these bars here match anything like this on the way. You know, it's just a really, really broad and wide range. And really,
yeah, it looks absolutely gorgeous to me.
You like that?
Yep, that's gorgeous.
Well, I suppose it is because it's hitting the top of the range, coming to the bottom of the range, hitting the top of the range. That's what you like, right? Yeah,
absolutely. Yeah. Yes, Gary, slingshot on Saturday, the freestyle version. Yep. Which, got to say, involves a lot of what Ash has just put on his chart, top to bottom stuff. It's that's a fair bit of of what's happening on Saturday.
Well, mate, let's wrap it up. Unless you've got anything else that you've got to say, I don't know.
No, not really. I think as you've just discussed, the euro is not even a consideration now for me for the rest of the day, because everything that you expect to happen has happened, and we are now in the hands of the CPI data coming out of the States in way too late for me. I'll be sound asleep. Well, I think I will. That's about 4 hours away, 5 hours away.
Yeah, something like that, mate.
Yep.
9 and then 12, 1, 4 hours, 4.5 hours away.
Yeah, I'll be done and dusted by then, so I'll wake up and see what my fate is on the, or shouldn't affect pound Swissy or Swissy yen. I wouldn't have thought too much, so that'll just bubble along and do what it's going to do. So no, really nothing till next week now, mate. I think I'm just happy to bowl along. Like Lewis, I like the silver chart. I'd love to see it duck below the $20 mark and then come back and 20.50-ish, and then come back and retest that trend line. That would be good.
Yeah.
So there's a trend line coming from about the middle of your page on, there, down through there. Yeah.
Interesting,
I'd
isn't it?
love
Because
to-
again, silver the same as the dollar and the euro, where it's caught in a range, but a very, very range. You know, it's top bottom. It's the same. These charts are all the same.
Beautiful.
So look at gold, same difference on gold. Top bottom, but wide. You know, it's a really wide range here, which does suggest that any breakout, as long as it pulls back, is going to give a decent move.
It'll go away. Yep, that's right.
Yeah.
It'll give you a decent run for your money when it does break out, no question.
Yeah.
When? Not so sure.
Could be today, mate. Could be today.
No, I don't think so. I think we're still headed to 1,200, 1,250 on gold.
I see. That. No, I mean that we might actually break the pattern today, one way or the other.
Yeah, the thing is, I suppose though, when we do break the pattern, in particular, if we break the trend, and as you say, we're now back above that neckline. If that neckline becomes a support level, look out.
Agreed.
Because they will start jumping into it, I'm pretty sure.
Agreed. I just don't know. I don't know. I don't know if I think we might be here.
Where
mate.
it
I
is.
think this might be.
Yeah.
Yeah. So we're actually under it, just above it, actually, just above it. But I just wonder whether, you know, and you look at that. I mean, that does suggest a $350 move to the downside, which gives us 1350. You know, it's kind of, it's down there. And the thing is about down there is that this area here is that it does run into, well, actually might be a bit late for that. But I'll tell you what it does do, it brings it right back to the support line. So there are some technical reasons to say, well, if it does break this down, this looks like a decent place to kind of try and buy this thing back up again. And yeah, so I don't know. Nothing's too cheap or too expensive.
For sure. And then the central bank digital currencies take over, and gold's not worth anything.
Yeah.
Hell might freeze over. You know, pigs might fly.
Well, they might.
Can't predict the future.
No, we can't predict the future. Gold's lining up for a year-end rally, Lewis reckons, and it might be, mate. I mean, this is the thing, is it's so difficult to say, because this could be a false break without any problems. It would suggest, though. I mean, it would be if this is going long. The ideal scenario.
I think we'll get the signal if it is.
Yeah, we want to see that, wouldn't we? We want to see that. We want to see it pull back and hold this particular line, and then we'd be dandy. Then no worries at all. I'll be happy to kind of jump in. But this is the sort of area that people just lose their money, isn't it? Because they're caught in a range. They don't know how to trade a range, and they're expecting a trend, and it's just not picking up. It's not happening.
Yeah, I'll be with you if that's the case. And I think we'll get a clear signal, you know.
Yeah. Well, more likely I'll be with you, mate, because that's the strategy I learned from you.
Cool. Happy days. Let's call it quits, eh?
Yeah, let's do it. Thanks so much, as always, mate, for being my trading buddy. And I hope we got 1 more week. No, we got 2 more weeks, haven't we? 2 more weeks
before
Bali, which you're going to be online and seeing us saying hello.
Yeah, I'll be part of it. Just won't be there, sweating my ass off and having late nights with Paul Bottrell and all sorts of things like that.
Yeah. Okay, mate. Well, thank you to everyone in the room as well for being our trading buddies. Always good to have you in. We see some really loyal people that kind of join every Monday and Thursday, and we really do appreciate it genuinely. But remember,
we have a conversation about twice a year, Ash and I, and we think, do we really want to do this? Do we really want to go next year? And the reason that we always come back to is because of you guys. We enjoy your company, and
Yeah.
of course, I love chatting to Ash on a daily basis about what may or may not happen, or what positions we should be taking. I think it's very, very cool to do that,
Yeah.
because
Likewise, mate.
trading buddy.
Likewise.
That's what it's about.
And George, I think, is a great addition as well. It's
Absolutely.
it's been fantastic having George in. So it's at least the core of the buddies are kind of building, and I include you guys in the room as the core as well. But we I don't know, maybe some more people in would be great. I'll tell you what I prefer though is that any of the guys in the room just came and sort of said if they've got anything they want to talk about. If you guys don't have anything you want to talk about, that's fine. But if you got any stuff that you want to talk about, it'd be great to kind of get you on camera. The problem actually is that some of these cameras aren't very good, are they? And some people don't have very good audio, and then it all becomes a bit difficult. Maybe that's some of the issue why people don't come on.
Lewis, you're not going to be there either, mate. My goodness, Bali will smash in half because you and I aren't there. Simple.
Yeah, it won't be the same. Won't be the same this year.
Although there's only, according to what PB was saying, only Sammy's is open in Legion.
Yeah, do you know what though? I'll tell you one thing about Bali this year. I mean, it will be a different type of Bali, but one thing I do think it will be is hugely educational. I think it's going to be a massive education for everybody.
No doubt about that.
Some of the people going, the likes of Gordon Scott and Leon and Julian.
Who's Leon?
Yeah, Leon's going as well. I mean, we really
Who
do have
Leon? I don't know Leon.
Oh, Leon. Oh, he works for a major kind of. He does advice for a major player in Europe.
Did I see him talking to Julian?
Yes.
At some stage they did
yes.
a trader cafe. Yeah.
That's right.
That right.
Yeah.
He knows.
So,
yep.
Yeah, it's just they're
Sorry,
really
he knows his SH1.
There's a big swathe. I don't know what the word is, but there's a lot of educational knowledge going, and a lot of experience going to Bali this year. So it's going to be for that reason it's going to be big. It's just and to be fair, mate, I think it would have been if the education that you would have provided would have been equally as valuable. It's just the fun element won't be quite as evident without you there.
I'm look, the closer it gets, the worse I feel, to be honest.
All right, I'm not going to go on about it anymore. I'll see you Monday.
Okay. Have a great weekend, everyone. Thanks for being our trading buddies. Bye-bye.